Good morning. Okay. So questioning was yesterday a new crack in the wall here. Get this market to possibly roll over here in alignment with the weekly downtrend, looking at the S&Ps anyway. We spent the last really 4 weeks just going sideways, starting with the weekly chart while there were bottoming tails and topping tails, and a gap and a big reversal last week, which was a pretty strong indication that the markets were going to go up, and they certainly could. They certainly could. Yeah. It's not that they have to go down, because yesterday there was a bout of selling, and you can see, even on the 60-minute, it was vertical to the downside. It stabilized for a little while over there, and then it just dropped like a bag of rocks off the roof. And it did some damage to the daily time frame, as you can see. And it is in alignment with this resistance area, which you can see it's kind of messy, taking on the shape of a messy head and shoulders top. Definitely a breakout failure here. And, historically, you've got a right shoulder. It's lower than this, but, things don't always have to set up in a textbook way. So the line in the sand is right here, meaning last week's low. And this is what you need to be looking for this week. Yesterday was a wide range bar, so today just might be a choppy day. And the least amount of retracement into that red bar, and we typically look at like the halfway point as a reference point, that see the tails to stay in the bottom half and the bodies ideally stay in that lower third. So you can see here the rally so far is kind of minor, whatever it is, I don't care. The distance came up to around, you can see that 2880 level, and prices are coming back in. And so we got a little breakout failure right there. And for scalpers, that's a place to get on board on the short side. And, you've got this support down here. You take your short-term profit, cover a few contracts, and wait to see if it'll keep going down. But in any event, getting below this level here should drive it down toward last week's low. And, retracements are a key part of our analysis, meaning I'm not talking about Fibonacci retracements. Those are, meaningless, hocus pocus lines that, you connect dots and mysterious levels show up based on decimal retracements. It's a ridiculous concept, that all of a sudden this is where support and resistance is going to be. Sometimes it does line up, and then, your Fibonacci aficionados, as I like to call them, show their symmetries and their confluence of different Fibonacci levels, how it lines up with a turn, which they point to after the fact. But in any event, when you look at those, you look to the left, and inevitably it's always in alignment with some support level of congestion or a pivot, 99.9% of the time. Anyway, so when we talk about retracements from a master trader point of view, it's about common sense. And so this was a wide bar. The further prices retrace and close into that big green bar, the more the potential to negate it and break through. Right? Common sense. Right? We don't need to draw lines to determine that. We just look at it. And in this time frame, obviously, we've condensed the information. And since this is a solid green bar, there's no tail, that signals, let's just say, power, authority, taking control, call it whatever you want. And that is supposed to result in a move higher. Now, that isn't a downtrend. So the failure of a bar like that is not going to be a surprise. We don't know what'll happen, but it wouldn't be a surprise. So at the end of the week, what we're looking to see is, did it actually fail? Or what if at the end of the week, this becomes a bottoming tail bar? And at that point, we got to be thinking it's going up. So in a sideways congestion like this, we're kind of being slapped back and forth, as to, oh, that's bullish. Oh, wait, that's bearish. No, well, that one's bullish. Which way is it going to go? And ultimately, it's got to break below one of these lines here. The high and the low. Right? That's truly the bottom line. All of this jiggles back and forth here, where we look at what's happening day to day and intraday that guide us as intraday traders. Ultimately, it's got to clear the top level or the bottom level, and in between here, it's becomes a guessing game based on what's happening. Anyway, we can see that things are pulling back here as I speak, and just that's what we do intraday. Just look to the left and say, oh, there's a place where it held multiple times. Let's see if it'll hold. And it's like, oh, it's not holding. And so something serious is going on here. Yeah, I know he started talking at 9 o'clock, Powell. So I don't know what he's saying. I don't have the TV on. In any event, it just dropped from here to here. I wouldn't be surprised to see it make a peekaboo underneath there and then try and stabilize. That's typically what it does after it falls like that. And then we'll see how much it can retrace. So as I said, today we'll just see what happens here as far as our SPX levels. It's Wednesday, so we look for our SPX expiration options. So what I'll be looking for, I'd like to see something above yesterday's high and ideally something below last week's low. I don't know if there's premium there. Any of you guys have looked, but I think those are the safe zones. Above yesterday's high and below last week's low for today. Right? So that's what we need to check out. I think, doing something in between yesterday's range or down below here is just too close for my comfort level anyway. All right. So spiders, flipping there, just to look at the different levels, right around there, right? Let's just call it 284. There's a support level there, and it's at 285. So it's coming down there. So as it comes into this, level here, we'd look for buyers to step up. And so again, looking at the same levels for SPX, or if you're going to do SPY, down below this level here, around 287-ish. Maybe you get away with a strike, just, a 280 strike. And, ideally up above here, 295. Qs, we know that they've been showing relative strength. They've been able to retrace, eyeballing this, I guess, around 80% of the decline. Certainly impressive. Big wide bar. I just picked an area here as my midline or intraday support reference point because of the hourly chart. This little congestion that went on there, thinking that would be the most reliable or powerful point. Is certainly the unfilled gap right down below. So we look at different reference points, but we got to start somewhere. No point in considering the unfilled gap before you consider this as your reference point. So 222, and right around there right now. Okay. So that's around where it closed. Exactly. This is, you can see the gray area. That's the overnight trading. And so the close was right around there. And so there was some strength, and now down and popping back up a little bit. So opening up, give or take, around yesterday's close, which, okay, sometimes you get big gaps into the red bar. That's not happening. If it was a significant gap down, I think there'd be buyers there. So kind of a coin flip here at the open to start. So at the end of the week, right, where is this? And we've got 3 days. Where is this at the end of the week? How deep did it retrace into that big green bar? Right, that's a big one. It moved up, and the deeper it goes and the further it closes, the more this is going to take on the look of a breakout failure and start pushing our bias strongly toward a bearish one. our futures here. It's retracing a little bit. So we always keep an eye on the different markets. So we saw that the the S&Ps were coming down hard. And as I said, once they break the lows, they typically pop back up again. You can see that's exactly what happened. It's just a common occurrence and how price action typically works. So we knew that was coming down there. It was likely to bounce. Got the Qs coming down to their support, bouncing a bit, and putting that little bounce in the context of this bigger picture isn't really that meaningful. It's just got traders reacting to technical levels of support and resistance. And we'll see how this shapes up throughout the day. YM has been the weakest, and as you can see, it's down here. It's down at the bottom of yesterday's range. It's close to last week's low. So you want to set an alert on this, and you can do it on the diamonds. Thing is to be aware of what's the weakest, whether it's actually breaking below last week's low, because last week's low to varying degrees was a bullish day and how big a bar. So you saw the Qs, right, a big green day, whereas this is within a range and a smaller green day, right, with very little tail. So a break below that level and ultimately a close below that level, we have to start stacking the chips, so to speak, onto the bearish side as more and more evidence becomes available. We talked about the internals yesterday. The first time they gave us a bearish signal was on Monday evening, right? So that's the first time, and the markets typically don't turn on a dime when that happens. So, yesterday there was a bout of selling, and we'll see how much that actually follows through. As I said, until we start getting confirmation of support levels being violated, it's just choppy, erratic price action. So, we take it day to day until something clearly breaks. And the Russell, right, had a bigger nasty day. Everything had that waterfall decline. We had, good trades shorting late in the day yesterday, and some of the stocks that Dan had pointed out and in the room, attendees in the room were working out well. Right? If they weren't, they were showing relative strength. I don't know if anything was. Ones I know I was looking at were going down and falling pretty hard, which was good. You hate seeing us being short a stock that isn't falling as the market is, falling as this one did intraday. Nonetheless, right, the question comes back to, no matter where we look, is it going to break last week's low? Is it going to be another week of sideways price action? We just wait and see until the things begin to move over to one side, so to speak, of the information, as we gather this information to determine, yes, things are definitely shifting. So, whereas we look at whatever it might be, I'll just pick a yes here. Well, this was moving up, a sloppy pullback, moved up strong, and now it's just going sideways, which raises a lot of questions. Which way are we going here? Right? Is it a resting period before going higher? Or is it a resting period before going in the direction of the higher time frame? And so normally, historically, it would be the latter, right? In the direction of the weekly time frame. And especially with a topping tail like that. It didn't follow through last week. So we just wait and see what's going to happen this week. All right. SPX, I already mentioned. Look, I want to get above the high of yesterday and ideally below the low of 2,800, if that's possible, if there's premium there. Yeah, 28. If you go to 29.20, if there's juice, I think you're getting dangerously close, and that's not me. I am not comfortable in the danger zone there. I don't like sweating too profusely. Tony internals. You can see here, sentiment is in the lower band. It's not at the high static level like it was over here that had given us the big warning sign back in February last year over here. And we knew trouble's coming, trouble's coming. I got tired of saying it, saying it's somebody's going to get hurt. And I was like, sooner or later, something's got to break here. I'm feeling stupid saying it again. And then the nastiness came. So this time, the turn came on a dime. We'll see how much it actually follows through. But you can see the deterioration in the breadth here with the lower highs and finally pushing up into that level. And so, the breadth was pretty negative yesterday at the close. And, here it was positive, but it didn't make much headway. It was kind of like spinning its wheels. So nothing more to do with this. We've gotten the alignment of breadth and sentiment at a bearish level. There's nothing more to read into it. Now it's all about price action until that give us another signal, which is going to take a long time. So oil just flat. There's just a lot of sideways. I don't know which way it's going. Bonds, sideways, gold, more sideways. Kind of looks like it's going to give it a try. Nice little pop there. Crude oil looked like it was going to go up yesterday and just couldn't do it. Anyway, no harm. Didn't do nothing there. And silver, that breaks out. I think it's going to make a nice move, set an alert. And that's about it. Transports, which we always look at, not a good sign. Green bar, pulling back to support in the green bar and breaking down below the green bar and closing below it, not a good sign. So bearish tones beginning to be heard here and there, but they're not screaming yet. So we'll see. All yours, Dan.
All right, thanks. Good morning, everyone. Yeah, Greg, I was waiting for you to talk about that end of day decline in the markets. So I was not surprised this morning to see a little gap up, because when you get waterfalls like this into the close, well, that could have, a small bounce to short into was not surprising. And we did get that little bounce until 9 a.m. when Powell started talking, but they're conflicting. So it's a bearish oversold downtrend on the 15, which suggests a little bounce. But yeah, the daily had a nasty bar yesterday. Let's take a look at opens. We only have 3 in the weekly. So today we will be looking for more bear call credit spreads for the weekly options trader. We have one in Boeing here for Friday. McDonald's, we have one for Friday, and work, W-O-R-K, we actually have a put spread. We covered half yesterday, and we moved the stop, which held even in that waterfall. We have a bunch of opens in the swing letter. Let's go through them real quick. We have a put directional on AAL on 3 airlines, LUV and Save. Save was a new one we entered yesterday. All 3 just look horrible. Airlines and cruise ships can't get off the map. Restaurants bounce, some of the travel stocks, hotels bounce, but not these airlines. Their little bounce was 3 days or less. BCO, we're short stock. That looks fantastic. A bearish 1, 2, 3 from a multi-week consolidation. It's beautiful. AIZ, we're short. Cowan, actually long stock, but just keep the stop. Caesar's Palace on earnings yesterday. We bought stock and then legged into a covered call. A Dish, long stock. Just let it play out. A hotel we shorted yesterday. Looks great. Hasbro, a covered put, which means we're short stock, short out of the money put. HST, short stock, looks great. JP Morgan, a put debit spread, so that's a bearish directional. McDonald's covered put, short stock, short out of the money put. WFC, short stock, looks great. Whiskey, long stock, actually gapping up a little bit. Maybe there's some news on it. And finally, XYL, we are short. So you can see we are very, very heavy weighted on the short side right now. ALC gapping up 57.50. It's gapping up over. So this is a gap breakout. So it's very bullish, but it's kind of too big. I would love this if it were gapping just to 55 bucks, because then it has a price void. 21.85, also a bullish gap, but you know, it's run a bit. We'll come back to it. Starbucks is not earnings, but I just put it here as a call spread candidate. So over Friday's high. Let's check that out when the market opens. Now I got a couple earnings here. INFN earnings. It's a bearish gap down there to $5, but I don't like shorting cheap stocks. S-Wave, I need more volume. HLI, I don't know what it's doing. These are all earning stocks. Bullish 3-day move here and gapping up. There's nothing to do with it on the short side. If I were long, I'd just be in trail mode. Looks like a long-term bottom though. That's worth watching on a pullback. The only problem is when it's this extended, it's going to take a while to set up, if at all, for a pattern that I'd want to get on board, because it has to go sideways, it has to retrace, it has to pivot, it has to give me a new frame of reference. This bearish gap here looks horrible. Mod overstock 18. You got to tell me what you're thinking. I mean, there's no pattern on the daily chart. Big old topping tail. I mean, you could get a day trade if it can get over this pre-market. Yeah, I mean, I'd prefer a bigger void, but yeah, if the market, and you know, I wouldn't be doing anything unless the market's holding too. This earnings gapped up coming in, your cheap stock, you're gone. 11 bucks. All right, here we go. Here we go. There's a bullish gap. So it's gapping, you know, it's not gapping at 13, where I would be saying, you know what, I wish it were gapping just to 11. And it is. So let's put this one on the list here, bottom right, PGTI. Light volume. PGNY. 25 bucks. Yeah, there's another bullish gap. Sure, Jason. See, folks, the gaps I like are just over significant resistance with a price void. So sure. I mean, this one trades a lot sloppier on the daily chart. But yeah, keep an eye on it for us. Here, I'll put it down here. This is light volume, and there's nothing to do there. You're gone. DDS had earnings, or lack thereof, another beat up retailer. It's, you know, just, there's not a great pattern, but it's getting hurt like many in the sector. Cyber 104, call spread candidate, and possibly even Condor. Maybe out of the money call spread, out of the money put spread for Friday. That's it had earnings, so volatility is high. This thing's, it's a bottoming pattern. It's in a trading range. It's dead. There's nothing to do with that. Yeah, blue is a bio, so I surely wouldn't be, you know, swinging it. It's negating the gap right here. I don't know. Hey, Ganga. AGTC had a nice breakout 2 days ago. 479. It's a bottoming pattern. I mean, it's not bad if it sets up. You all can watch that if that's your style. XP 27, gapping way up here. I put this VTIQ also. All right, this VTIQ here in this middle window, gapping up to 32 from this wide range ending. So I have this on my list for a short. Look at that thing, just straight up. This is what Elon Musk's rocket is going to do. Look at this. That is straight up. Wow. So I got that on my short list. Hey, Ganga, it's fairly easy. Yesterday's high, last week's low. How's that for easiest? This is a big old gap down here, but it's too big. 20, nothing to do there. You're gone 8. Bearish gap way down here. Call spread candidate. AUPH, nothing, you're gone. ALGT, bottoming pattern, but hey, you know, it's a bottoming pattern gapping up. Let's keep an eye on this 30-minute high for a day trade and a put spread. That's opening bell if you didn't know. All right, so here's a big gap. It's too big, but it's bullish. Gap down, ADPT. Possible call spread candidate. Oh, here's a nice gap, PGTI, gapping over a red bar, breakout. Oh, I already have this here in the bottom right. So yeah, I like this one. But did you see, do you see how my approach of just the consistent analysis of gaps, I just quickly came to the same conclusion, not even knowing that it was the same symbol. That looks great. Let's watch this 5-minute high. And that's a very nice gap breakout trade right there. And it's on its own page. Market's still weak, but we don't do a thing in the first 5 minutes except either sit on your hands or